Good morning, welcome to our outlook for the week here at OPC Markets. I'm Neil Wilson. And well, last week was another good week for oil. We saw really the dip buying continue. Any pullbacks in the price action have resulted in buyers coming in, and by Monday morning WTI trading above $74 per barrel, the highest since 2018. So the outlook for oil is increasingly positive. The market remains tight. OPEC meets this week to discuss how it might increase production in August and perhaps beyond. Now, the chatter is around this 500,000 barrels per day mark. That's what we're looking at. Anything less than that would probably be a bullish signal. However, it might reflect the fragility of the demand recovery that is taking place. There are rising cases in Asia in particular, Australia locking down some parts of the country, Indonesia experiencing a big rise in cases, but nevertheless in key markets demand is recovering strongly. The US gasoline demand is back up to almost 10 million barrels per day, the highest since 2019 for this time of year. Air travel is also rebounding and is almost back to normal, not quite, but getting there. Diesel demand in Germany, another big source of global oil demand, is up to levels seen before the pandemic. So there's a lot of encouraging signs on the demand side, and supply certainly remains tight. Baker Hughes rig count shows 470 rigs drilling in the US. That is down from 800 just prior to the pandemic. So although prices have recovered strongly, there's not been an uptick in drilling activity in the US that we might have previously expected. So conditions remain favourable for higher prices, and I think OPEC Plus this week is going to gently guide the market, try to maintain the balance and try to keep prices stable around this sort of $75 level. And I think 500,000 barrels per day increase for August should potentially do that. However, global inventories are falling fast, and if there is continued improvement in demand, then it could be that the market tightens even further and OPEC would then be able to release more oil. Now, on another side of the OPEC equation is Iran, of course. There have been fears that a nuclear deal will allow Iranian oil back onto the market, but that seems to be unlikely to happen anytime soon following the elections there. And also Iran over the weekend missed a deadline to sign their atomic monitoring agreements with international inspectors. So the situation with Iran is uncertain, but we do not think that there'll be any release of Iranian oil onto the market anytime in the immediate future, though of course progress on a nuclear deal remains possible, and we could yet see Iranian oil back on the market towards the end of the year. So as I said, to recap, the week ahead we've got the OPEC meeting coming up. We've also got Nonfarm payrolls on Friday. Keep your eyes open for that one. That's going to move the broader risk sentiment and broader risk assets. But for oil markets, it's very much about OPEC and what they decide to do for August.